Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now guys, let's take a look at the gold market. On the gold market, the event that we have discussed on Friday and that really has the special meaning for us has happened. So you can see that market has formed a bearish grabber on the daily chart. That suggests the taking out of these lows. That's the grabber that I would like to get because it stands in a direction with the previous thrust down. So the target of this grabber is also stands to the downside, and it assumes the taking out of the 1270 lows. At the same time, this grabber could be really the crucial moment because it suggests the taking out the crucial level. Since 1270, as we said, is a very significant level, and if market will fail here, it probably will open the road right to the 1240 lows on the weekly chart. That's why this grabber has the really special meaning for us. Besides, this is some sort of the cherry at the pie of the recent retracement, because as you can see, the recent action to the upside mostly reminds the consolidation, the flag pattern, and we do not see here some thrusting impulse action. It mostly takes the shape of the retracement, and that makes us think that gold market really could continue move to the downside. In fact, guys, except this recent thrusting action in the beginning of the August, we do not see any bullish moments. And based on the fundamental data, based on the safety series and report, I hope you have read our weekly research. All these fundamental data point on real weakness of the purchase power on gold market. It's really a lack of demand on the physical gold market. Recent safety data shows that traders has closed bullish positions because the open interests have decreased as well as the net long positions. So investors currently has really low assurance with the possible appreciation of the gold, and that really presses on the gold market. That's why in the current circumstances the appearing of the bearish grabber could be in fact this culmination of the overall bearish sentiment that now stands around the gold. Anyway, we have the pattern here, and currently we should rely on this pattern and do not take any long position, at least until market will not erase this pattern. And then we will see what will really happen. Because currently, guys, I also feel that gold right now stands under pressure, and the downward acceleration currently looks more probable. Although I do not know what sanctions will European Parliament will take on the coming week, since they will discuss these sanctions on the current week. I do not know what will happen with the David Cameron offer to cut off the Russia from the SWIFT interbank system. Well, as you understand, the geopolitical tensions really carry some sort of the uncertainty, and they could impact on the market, and they could really shift the situation. But right now, based on the technical picture, based on the fundamental data from the economical data, gold market looks like has more chances to continue move lower. And right now we mostly will deal with this in the short-term perspective. We mostly will deal with this bearish grabber. What we have on the 4-hour time frame chart? On the 4-hour time frame chart, we see that this flag pattern that I just have mentioned. So it mostly looks like the retracement. You can see that market is trying to pass through the 1291 confidence resistance. Recall that is the confidence resistance that we have discussed on the previous week very often, but has failed here, returns right back down. Now the breakout of this flag probably will suggest the starting action to the downside, and market will probably at least will taken out of these lows. But as I said, if market will take out the 1270s, it will be really the half step in the direction of the 1240 destination. On the hourly chart, I would like to mention and attract your attention to the risk moment for the grabber. Take a look that here you could see that market has formed on the hourly chart multiple stop grabbers that theoretically suggests the taking out of this stop. That's the first reason. The second reason, I don't have it on this chart, but here we have the monthly pivot point for September, that 1294, that of course haven't been tested yet. And as you know, market really gravitates to the monthly pivot points. So if market really will move high and taken out of these highs as the gravitation to the monthly pivot, in this case the stop grabber will be vanished. So currently, guys, we need to see what will really happen. Let's hope that this will not happen, but that is an invalidation point of the stop grabber. We would like to see that market will stand inside, will remain inside of this swing down, and we would like to see that market will turn down and erase these grabbers. That's what we would like to get from the bearish point of view. If this will not happen, and if market will accelerate right above it, taken out to these highs, do not take short position and wait what will happen, because this action to the upside will erase the grabber. That's why before taking any position, it's better to wait when the market will clarify the situation with these multiple grabbers, and particularly speaking, whether it will erase them or not. It's difficult to advise how to deal with it, because as market moves higher, it's more simple to take position based on the daily grabber, because you become closer to invalidation point of the grabber, and that will minimize your risk. At the same time, as higher market moves, as greater chance that it will taken out of these highs due to these grabbers and continue move higher. So that is the real risk that you will meet when you will trying to trade this pattern. So you have as usual, you have the choice either to take position with the tighter stop, but the greater chance that the greater odds that you will get the loss, or take position at the worst level, take the worst entry point, but with the greater chance that market will continue move lower. So that's the standard choice when you're trying to trade on the markets. That's why try to decide it by yourself, depending on your trading style and your risk management. So that choice is up to you. But what I would like to say, that's our trading plan suggests, is we will deal with this grabber, and we hope that this grabber will work. At least the fundamental situation supports the overall bearish view, and this is not really the thrust and impulse action, that's just retracement. That's why chances that market really could turn down based on this pattern seems significant. So let's see what really will happen. Also, guys, if market really will take down from here or from here, don't be upset if you will not take the long position somewhere in this area, because to the 12.4 is really big distance, and if market will pass through these lows, we will still have a lot of room for taking the short position. So don't be really upset with this. So decide by yourself. Maybe you will still take some risk and take small position here. If market will turn to the downside, you would add more. So there are a lot of really options how to trade this setup, and all of them have their own advantages and disadvantages, as usual. So you probably, since you trade on the market for a long time already, you probably know this even better than me.